SoFi Q4 results were just announced an hour ago, so we are almost live streaming these results to you right now. And what can I say? The results are pretty amazing. I'm struggling to find even one metric where SoFi didn't beat the expectation of the analyst or their own guidance. Hello, my name is Vadim, and today we're talking about SoFi's results. We are going to talk about guidance, the results, the analyst estimate. The only thing we are not going to cover in this video is the webcast of the earnings call and the questions answers from analysts. If you want to see us break down these earnings calls, and sometimes they can be quite interesting. If you want to see us break down the earnings call, let us know in the comment section. Let us know with your likes and subscribes. I mean, if this video reaches something like 10,000 views, we'll probably make the follow-up video the next one. So it's up to you. Like, subscribe, comment, and we will make a video breaking down the earnings call of SoFi. So just to kind of set the scene right, Q3, the previous earnings of SoFi were quite amazing. They beat the top numbers, the bottom numbers, they beat the guidance, they beat pretty much everything. The growth was much better than expected. And going into Q4 results, everyone were kind of worried because we all wanted to see if it was a one-off thing or there is a new shining star of the fintech which is being born right now. So we are of course going to talk about that. And one more thing before we're going to talk about the guidance. One of the analysts on Seeking Alpha with the name of Deep Value Investing, he mentioned that SoFi has this pattern when they are guiding for the whole year. Usually their guidance is quite modest and they are increasing the guidance as they progress through the quarters throughout the year. So they will give some kind of modest guidance right now. In Q1 it will be more ambitious. In Q3 it will be the most ambitious, something we saw in the previous quarter. I will spoil the surprise for you right now. The guidance beat the expectation of the market. So without further ado, let's talk about the results of SoFi. So first of all, of course, let's talk about the revenue. So the revenue expectations for SoFi was between $3.5 billion and $3.63 billion, with the consensus at 3.56. SoFi did $40 million more at 3.59. These results mean that if you are comparing quarter over quarter, so Q4 of fiscal year 2025 with Q4 of 2024, the revenue growth is 40%. If we are comparing the whole yearly result, the growth is 35%. Which for a company with a market cap of $30 billion in financial sectors, 35% growth year over year is pretty good. It's pretty impressive results. Anyway, they beat this expectation and it was a great result. Now let's go straight to the earnings per share. So let's see the top number and the bottom number. So earnings per share coming into Q4. The expectation, the consensus was 11 cents per share, and SoFi posted 13 cents per share for Q4, and the expectation for the whole year was 37 cents per share, and SoFi posted 39 cents per share. So again, they beat this result as well. Now let's talk about SoFi's business, and let's talk about new members which SoFi had added, and let's talk about new products. I will talk a little bit about what each of these things. So new members is the new users, new customers of SoFi services. In this quarter, something amazing had happened. SoFi had added more than 1 million new customers in this quarter alone, and the overall number of the customers is at 13.7 million. If you remember our video from a year ago where we talked about leaked Q4 results just a year ago, we have taken the number of 10 million users. So throughout the year, SoFi had added almost 4 million new users, which it's great. I mean, it is impressive. And product. Let's talk about product. So product for SoFi is the financial service which they provide to a user. For example, if you are a customer of SoFi and you have a checking account, a loan, and a credit card, you are using free products. Now, one of the metrics which we really like seeing in SoFi's books is how products are relate to users. We want to see growth in products more than growth in users, because it means that SoFi is being able to offer more and more products to the existing users already. And user acquisition price is low, and SoFi can earn a lot of money on offering the products to existing users. So what had happened, products were 1.6 million new products in Q4, 37% growth year over year. Overall products of SoFi on the platform is 20.2 million products. One quite amazing number which SoFi shared on their presentation: 40% of new products opened by existing members, and this is 7% increase year over year. Now, if you haven't pressed the like button and haven't subscribed to the channel yet, why the hell not? Let's talk about brand awareness. This is not something we have talked about SoFi and brand awareness on this channel in our videos, but Anthony Noto actually said that this will be one of the most important things going forward, and SoFi actually talks about this in their presentation, so let's talk about this as well. The number we want to talk about is unaided brand awareness. Currently, it's 9.6%. I will explain what it is. Currently, it's 9.6%. Anthony Noto, SoFi CEO, said that SoFi will aim to get this number to 20s, 30s. Unaided brand awareness is the measurement of how many people will say the brand of SoFi when asked to recommend financial company. So for example, someone comes to you on the street and says, hey, which 5 financial companies would you recommend for whatever, checking account, credit card, loan, whatever. And this person is not offering you any answers. So it's not like he's coming to you and saying, which one would you pick, JP Morgan, Citi, or SoFi? No, he's coming to you and just saying, give me 5 names. And 9.6% of all of the people who were asked mentioned SoFi. Anthony Noto wants to get this number to 20%. So to get SoFi's brand to be more recognizable in the world. So currently it's 9.6%. It's the highest it has ever been, but SoFi has a long way to go. Rule of 40, which we often mention on this channel, is the measurement of how growing and how profitable your business is. So adjusted EBITDA margin plus growth in revenue. Rule of 40 for SoFi is 68, which is just amazing. Like, this is a great business. The only question is valuation and at which price you're going to buy stock of SoFi. One of the most important things in this report is something called fee-based revenue. So we have talked about this a lot on this channel, that SoFi is transitioning more to operate on the fee-based revenues, which means that SoFi stops being a lender of their own money and starts being a platform, a man in the middle for other third parties to lend money to the customers. And this is great because, again, we have talked about a lot on this channel that fee-based revenues is much more stable, much less risky. SoFi does not have to take all the loans and put these loans on its books. A lot of different arguments about why this is better, and SoFi is definitely moving to this direction. Fee-based revenues is up more than 50% year over year. It will generate $1.8 billion on annualized basis, and this is huge. Their loan platform business, LPB, is definitely working, and well, SoFi is definitely a fintech now and not a bank. Now let's say a couple more words about the guidance. I promised you about the guidance. Let's just run over this because there are a couple of interesting things there. So first of all, total members for 2026, SoFi is guiding for a growth of 30%. This year it was 35%. Next year, SoFi is guiding 30%. Remember how I told you that the guidance will be modest? This is their modest guidance. I think it will be more. I'm not sure SoFi will reach 35% this year, but on the other hand, this is exactly what I said a year ago and I was mistaken. Regarding the revenue, SoFi is expecting 30% growth in fiscal year 2026. So they are expecting the revenue to be $4.65 billion. Again, this is a modest expectation, and this has beaten Wall Street expectations by $100 million already. Adjusted EBITDA margin will be 34%, so more than it is right now. SoFi is going for more profitability next year, which again, it's great. And earnings per share, the consensus was 58 cents for 2026. SoFi is guiding for 60 cents in 2026. This year, I remind you, it was 38 cents. Next year, they are guiding for 60. This is a growth of more than 50% year over year. So SoFi is a fintech star without any doubt. And I mean, I'm kind of laughing at the analyst from Bank of America. We have talked about him on the previous video. If you haven't seen the previous video, go and watch it. I'm really curious if people from Bank of America will be on the earnings call, and I'm going to go and listen to it right now. I'm really curious, like, are you seriously going to downgrade SoFi, tell people to sell it, put a target price of $20 per share, and then go and buy a bunch of stocks? So this story is still not sitting right with me. Anyway, great result. Let us know in the comment if you want a continuation of this video for us to break down the earnings call and to break down further the earnings report. Thank you very much for your time. Don't forget to like this video, subscribe to this channel, and we will see you in the next video. Take care.